In this video, we're going to get started with the process of ledger posting. We will take the 14 transactions and the journal entries that we wrote for these transactions, and now we're going to bring these transactions. We are going to classify these transactions into their specific accounts. All right, let's get started. So these are the transactions from the previous section. We have already done this, same numbers, same journal entries. So these are the 14 transactions. All I have done, in preparation before we go to ledger posting, we need to do some preparation. So what I've done is I have listed down all the accounts which are involved in these 14 transactions. So I have written this list here, and then what I've done is I have created a blank account for all these possible items which exist in the 14 transactions. So if I click on this link here, I go to a page where I see a bank account. Now this is the same format as we discussed in the previous video. There is a debit side, there is a credit side. There are 3 columns on debit side and there are 3 columns on credit side. Now likewise, we have the formats, we have blank accounts, passbooks for all the different types of items involved in the 14 transaction. So shareholder capital account, bank loan account, you have purchase account, ABC, sales account. So all the possible accounts which were debited or credited, I have created a account format for them. And you see that some are smaller accounts, some are some have more space on the page. That is based upon number of transactions that they're involved in, because I know all of that. I know how many transactions are there for a specific type of account, so I've adjusted the space accordingly. So the first thing to do in the ledger posting is to identify how many accounts need to be prepared, and then get those formats ready with you. All right. What is the next step? The next step is to look at the transactions one by one, and then move these transactions from journal to ledger. All right. Let us do that process now. So you look at the first transaction, which says bank account debit to owner's capital account. Now what do? You are preparing bank account first of all. We're going to prepare every account. Let us start with bank account. We are preparing bank account, and we are going to go to the bank account, and when I click on this link here, I have automated this process. I directly go to bank account, and I can quickly come back to this page as well. So what is happening here is, in this transaction, we are debiting the bank account. We are giving a debit to the bank account. Therefore, we are going to go to the bank account, and we're going to look at the debit side. In the journal entry, the bank account is being debited. So you go to the bank account and then you move to the debit side. That is the first step. The next step is to write the date of the transaction. Date of the transaction, in this case we have transaction numbers rather than the date of transaction. So I'm just going to write transaction number here. And then I'm going to go back. And since we have already decided that we are going to write something on the debit side because bank account is being debited, so this tells us go to debit side of bank account, and then on the debit side we are going to write this, the other account involved in this journal entry, owner's capital account. So on the debit side I am going to write to owner's capital account. Oh, this is also shareholders account, so one of the same thing, don't get confused there. So owner's capital account is written and the amount is 100, so I'm going to write the amount 100. This completes one small step in ledger posting. We looked at the bank account, we looked at the first transaction, and now we have posted the first transaction in the bank account. And now we're done with posting this transaction in the bank account. This process is called ledger posting. You have posted one journal entry in one account. Okay. So going further, what we're going to do is look at all the transactions, identify the transactions which involve bank, and then post these transactions in the bank account. All right. So let us do that. Transaction 2 has bank account as well. It says bank account debit. Therefore, it tells us to go to the debit side of the bank account and write to bank loan. Write the name of the other account which is written in the journal entry. So we are going to go to the bank account again. On the debit side, we are going to write transaction 2, or if we have the date, we will write that. And we are going to write to bank loan account. Why did we write it? Because in the transaction, the other account involved is bank loan account. I'm repeating it. The process of posting is as follows. Decide which account you are posting into. So the decision is that we are going to post into bank account. Now this bank account is being debited here. So the entry is telling us to go to the debit side of bank account. We do that. And then we write the transaction number or the date. And then we write the name of the other account, which is to bank loan. Amount is 200. So amount is 200, and this completes the second posting. We have posted transaction number 2 into bank account. Let us look at more transactions with bank account. Transaction 3 also involves bank account. However, in this case, bank account is being credited. We are not debiting it. So this transaction is telling us to go to credit side of bank account. So we're going to go to the credit side of bank account and write transaction 3. So credit side transaction 3. Now just like we did it for the debit side, we are going to write the name of the other account involved. So what is the other account involved? Purchase account is the other account involved. So here we are going to write purchase account. And the amount of purchase is 50. So we're going to write 50. And there is another new convention that I'm going to tell you now. On the debit side, we wrote to owner's capital, to bank loan. On the other side, on the credit side, there is a convention of writing by, by. Does not necessarily mean anything scientific here. This is just a convention. We use these words by this word on the credit side for all the accounts. All right. No logical explanation available for this. Let's go back to the transaction. So we complete another ledger posting. We are done with transaction 3. It has been posted into bank account. Let us go to next transaction. Transaction 4, purchase account debit, ABC account credit. Now, in this transaction, bank account is not involved at all. Bank is not affected. Goods are being purchased on credit. So, bank account is not involved. So, you will not post this journal entry into the bank account. So, just ignore it for the purpose of bank account. Let us go to transaction 5. Transaction 5 involves bank account. We are debiting the bank account. So, we are going to go to debit side of the bank account and write transaction 5. Again, I click on this and I go to my bank account. I write transaction 5 and I'm going to write the name of the other account involved, which is sales. So I will write to sales 50. Sales and 50. And we are done. Transaction 5 has been posted into bank account. Let us go back. Now let us look at next transaction. Transaction 6, PQR debit to sales. There is credit sale which is happening. Notice that there is credit sale, no cash is being received, no bank balance is being increased here. So we have to ignore this transaction as far as the account, bank account is concerned. Let us go to transaction 7 now. Rent account debit to bank. You are making a payment through the bank. So the bank account is being credited here. So we are going to go to the credit side on the bank account of the bank account, and we are going to write rent account 20. So we go to bank account and we write here rent account, the amount is 20. This is transaction 7, and as the convention is, we are just going to prefix by here, right? For no specific meaning. You could just remove buys as well, but when you go to textbooks you will see to and by on both the side, so don't get confused there. They don't have any logical scientific meaning in the sense, just a convention. So there you go, transaction 7 has been posted into bank account, the ledger for bank account. Let us go to transaction 8. Building is being purchased, bank is being credited again. We go to credit side of the bank account and we write buildings account 100. So we're going to go to bank account and write buildings, building account 100, and this is transaction 8. And as the convention is, we write a buy here. And done. Transaction 8 has been posted into bank account. Okay, let's move on to transaction 9. We have bank account involved again. Building is being sold. We go to debit side of bank account and we are going to write the name of the other account. Transaction 9 to building 30. So transaction 9 to building. To building account 30. I should have written account here as well. There you go. Transaction 9 has been posted to bank account. Transaction 10, bank account is going up again. We go to debit side of bank account and we're going to write to interest income. Transaction 10, amount is also 10. Oh, sorry about that. So transaction 10 to interest income, and the amount is 10. So transaction 10 is done. Let's go to transaction 11. Depreciation debit to building, no bank account involved. Ignore this transaction. Transaction 12, this is actually bank account. It's missing here. So bank account debit to PQR, and the transaction is that you're receiving cash in lieu of credit sale. So you go to debit side of bank account and you write to PQR 40. To PQR's account 40, and this is transaction number 12. Again we go back, transaction 12 is done. Transaction 13 does not involve any bank account. Transaction 14 involves bank account. We are paying to our vendor. Bank account is being credited. We go to credit side of bank account and we're going to write by ABC Limited 50. So we go to bank account and we write by ABC Limited's account 40, and this is transaction 14. Let me just double check the amount. 50. So made a mistake there. 50. This should be 50. And we are done. So we've gone through 14 transactions, and out of the 14 transactions you have 1, 2, 3, 4, 5, 6 and 4, 10. Out of 14 transactions, 10 transactions involved bank account. So you have brought all the transactions which affect bank account to one place. So everything is here. You can just look at this bank account and then come to a conclusion as to how did the bank account go up and how did the bank account go down. What were the receipts of bank account and what were the payments of the bank account. How do you do that? You look at the debit side. On the debit side, it is written owner's capital. Now, what happened was owners brought in capital, shareholders brought in capital to the business. So 100 were deposited in the bank account. Then bank loan was taken, another 200 were received in the bank account. You did some sales, 50 were received. You sold the building for 30, again some money was received. Interest income, and then PQR, paid to your customer, paid to you. So if you notice, on the debit side, you have all the inflows of cash, inflows into the bank account. On the other hand, you have purchases. When you purchased, you paid 50, you paid rent, you purchased a building, so you paid for it, and then you paid to your supplier. So on the credit side, you have all the outflows. You have all the outflows from the bank account, and you know the reasons for it as well. So another way of reading this would be, the bank account went down, or you made payments. The bank account decreased due to purchases, due to rent paid, due to building, due to ABC Limited, right? And on the other side, you would say we received cash from various sources. Those sources include owner's capital, bank loan, sale of building, income from interest, and received from the customers. Now that you know the inflows and outflows, you can easily figure out what is the remaining amount. So all we have to do is just sum this up. So you've got 350, 380, 390, and you've got 430 as the total amount on this side. On the other hand, you have 150, 70, 220. So 220 is the total on the credit side. All you have to do is 430 minus 220, and you've got 210, which is the balance in your bank account. Now you could have gotten this balance from the bank statement as well, but as I said, it's not only for bank account. There are other accounts which for which you will not be able to figure out balances if you did not prepare your own passbook in a way. All right, so let me now stop here, and this process of ledger posting, I hope it made sense, and you have basic understanding of how the journal entries are going to be posted into ledger. I'll see you in the next video where we are going to transfer, where we are going to take the other rest of journal entries into rest of ledger accounts. So I'll see you in the next video.